and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our expert. But before that, two things. Firstly, Cheryl, welcome back. And secondly, looking at the markets are trying to stabilize themselves because as of now, not much of an action on the benchmark indices, but a lot of stock-specific action today.
Absolutely. Great to be back. Happy New Year to you, Shrishti, and all the viewers, given the fact that this is my first show in the brand new year. If you look at the way how the markets are panning out, taking a bit easy, just like the way how the global markets had indicated. Remember that yesterday was the first trading session coming in for the US markets, a very mild close coming in for S&P 500 as well as Nasdaq. You had the GIFT Nifty also indicating that we will be in for a softer start, and that's exactly how it's transpiring right now. 0.5% downtick coming in for the Nifty. We are sub that 21,600 mark as well when it comes to the benchmark indices. Let's take a look at what actually Nifty Bank is doing, because that sort of a picture is pretty better compared to the benchmark indices, because you're seeing a tad bit of outperformance when it comes to the Nifty Bank when you compare it with the benchmark indices. So Nifty Bank is seeing cuts of approximately 0.3%, while the broader markets are holding on to positive territory as of now, be it the mid cap index or the small cap index for the matter of fact. Talking about the advanced decline ratio, right now it is a tad bit still tilted in the favor of the gainers. So let's wait and watch it and see which side of the market actually we see towards the closing of the session. Talking about which are the stocks that are gaining, yes, you have the Adani Group counters that are actually bucking the trend right now, with Adani Enterprises being the top gainer on the Nifty, 3.5% coming in, uptick coming in for Adani Enterprises. You have ITC that's seeing gains of about 1.6%, Adani Ports seeing gains of about 1.4%, but a tad bit of cool off coming in for some of those counters from the day's highest point. But on the flip side, it is JSW Steel, Hindalco that are taking a bit easy. LTI Mindtree, Wipro, Infosys are the other set of losers in trade. So suffice to say that the IT index is among the top sectoral loser, along with the metal index, both of them seeing cuts of approximately 2%. 2% for the IT index. For metal index is down about 1.5%. Auto index also taking a bit easy. But on the flip side, PSU Bank index, realty as well as powering ahead. So that's the way how the markets are looking like at this point in time. Brand new year coming in for the markets, and we're taking a bit easy, Srishti.
Well, yes, but a brand new year and foreign flows will improve this year, and that's the belief coming in from the brokerages. And the tilt seems to be in the favor of financials as well as domestic economy related plays. Let's break it down for our viewers then what these brokerages are saying about India right now. And for this, let's go across to my colleague Somit Sarkar, who is joining us with all those details. Take it away, Somit.
Jefferies is firstly saying is that the multi-year capex cycle is expected to continue. They are expecting foreign flows to continue in India even in calendar year 2024. As per sector, they are saying that banks offer the best risk-reward ratio, while the relative valuations are not that expensive. Now, if you see the Nifty 12-month forward P, that stands at around 20 times. Now, this is higher than the past 10-year average, but it is just at a premium of 67% compared to the emerging market basket, which is largely at par with what it was trading earlier. Now, Citi is saying that there might be some slowdown when it comes to mutual fund flows, because as per their economists, the household savings are now getting exhausted. They are expecting the EPS of Nifty to grow at around 17 to 20% for FY24 and around 14 to 15% for FY25. They are also saying that the valuations are not that expensive, and they are preferring large caps over mid cap and small cap for 2024. Lastly, when it comes to Bernstein, they are saying that valuations have inched up, making it challenging to find convicting ideas with conviction, which according to them is a sign of market peaking out. They are saying that earnings growth would be around mid-teens, and they are not expecting any surprises on the upside. When it comes to valuations, they are saying that small and mid cap are trading at the highest premium to the large cap in the last 15 years. And though they are positive on the macros, they are advising investors to book profits at this stage. Now, when it comes to the Nifty target for December 2024 end, Jefferies has a target of close to 24,000, which suggests an upside of around 12%. Citi has a target of close to 22,500, while Bernstein has a target of close to 23,500. And when it comes to stock and sector specific picks, Jefferies has given a host of stocks which include Axis Bank, ICICI Bank, Macrotech, Godrej Properties, Coal India, Eicher Motors, Bharti Airtel, Adani Ports and Kajaria Ceramics. Citi on the other hand has given 5 contrarian bets which include HDFC Bank, Cipla, Devyani, Industars and Endurance Tech, while they're overweight on PSU, utilities, defense, industrials, banks and insurance companies, while they're underweight when it comes to consumer discretionary, IT and metals. When it comes to Bernstein, a host of changes in the sectors. They have downgraded mid and small cap on a relative basis. When it comes to large cap, they have upgraded IT services and telecom to overweight. They have downgraded consumer tech to equal weight, while their overweight call remains on financials and healthcare. When it comes to metal, they have also upgraded that counter to an equal weight rating. They have downgraded consumer tech, real estate and cement to equal weight rating, while in consumers and industrials and utilities, they are focusing on select stocks. So that's a host of stocks coming in from major foreign brokerages for calendar year 2024.
Thank you so much for that, Somit, for putting all of that into context. What basically brokerages are saying when it comes to the Indian markets, what's their outlook coming in for the year 2024. But let's pose that question then to our experts today. We have Kunal Bothra as well as Vivek Karwa joining us on the show. Firstly, Happy New Year to both of you all. Thank you so much for joining us on Buy Now Sell Now. Vivek, let me come first to you and ask your take. Which are the sectors that you are bullish on when it comes to the year 2024, and what's your view coming in for the index? Do you think, given the fact that we've seen that rapid rally that the markets actually posed towards the latter half of the year 2023 will now actually take a pause, and which are the sectors that you think will stand to benefit going ahead?
Shirel, Kunal and Srishti, Happy New Year to all of you, and also to all the viewers. So this is the first show of 2024. Now, see, I feel these brokerages are late because sitting in India, we know that it is going to be India's decade for next 7 to 10 years. I think India is going to be the market which is going to outperform all other world markets going forward. Saying that, see, I am bullish. I am quite bullish on the markets. And firstly, coming to your taking a pause, I think markets should take small pause post-elections. So I'm thinking somewhere in June, there might be a small correction once new government is formed. And that would again throw up an opportunity to everyone who have missed the rally. Regarding sectors, I am quite bullish on defense. I like healthcare, banking and financial services. I am quite bullish. I've been mentioning that many times. And also pharma. So these 4 sectors, I think, should give you enough money to retire rich over next 5 to 7 years minimum.
Okay, so those are the sectors that Vivek is bullish on. But Kunal, coming to you, first of all, what's your target coming in for Nifty 50 for this particular year, as well as which sectors and stocks will be on your focus list, given this year that we have a lot of factors that will be at play. It's the election year, budget is around. So what's your sense on that?
So, good morning first of all, and my sense is that the index targets which I'm looking out for is at least another 20% upside from current levels, which means that my expectation is closer to 25 K on the Nifty, and my also belief is that the Bank Nifty and the banking index could make a very strong and a dramatic comeback. We've already seen the Bank Nifty doing pretty well over the last 1.5 odd month, but it's been a late recovery for Bank Nifty as compared to many of the other sectors which generally have played a leading role into a market rally. But this time around, I would probably sense that Bank Nifty could probably play a leading role towards the index benchmark indices moving up significantly higher. Now, in the aspect of sectoral outperformances, my my sense is that when the market gets into a broad-based rally, when bull markets shape up into second, 2-tier, 3-tier up moves for themselves, we expect the rally to be a bit more broad-based, like what we've already seen in the last 3-4 months. PSUs, pharmas, real estate. Many of these stocks, high beta, low beta, they have done exceptionally well for themselves. The only difference which I believe could probably happen going forward is the strong comeback of large cap stocks which have been huge underperformers. So not a sector as such, but I would probably believe that large caps would stand to gain much more stronger than possibly the mid caps and small caps for a good part of this year.
All right, so that's the view coming in from both of our experts when it comes to the outlook for the markets for the year 2024, and also which are the sectors, which are the space that one should watch out for very closely. According to Kunal, he expects the large caps to make a good comeback in the year 2024. But on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But here's a programming alert for all of our viewers. ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, which is a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day will be celebrated on the 5th of every month. So join ET Now Swadesh as well as Sundar Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back. You're still tuned into Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of a screen. And you can also write to us on our social media pages, that is Twitter as well as Facebook handles of ET Now. But with this, let's kickstart taking your queries then. And the first query that I have is coming from Renuka. And Vivek, Renuka is holding two stocks. Firstly, Tata Powers, where her buy price is 240 rupees. And she also has HAL from levels of 1900, sitting at good profits in both of these names. Is that a hold or sell at this point in time?
Shril, both these stocks would be a hold. First of all, Tata Power, see at these valuations, it's trading approximately 0.68 PEG ratio. And what I feel is, if you compare it with even the PE on historical PE, it is not that too costly. So it is approximately 30. And what is happening in power sector, and particularly the EV space. So there's a lot of focus on the EV side by the government. And in future, you'll find the Tata Power tying up with many companies to put kiosks of EV charging and various other things are going to happen. So it would be a hold for long term. HL is a good stock, but what I feel is it might remain stagnant for next few months. But if you're looking at longer term, and the kind of spending India is going to do on defense is going to be phenomenal even going forward. So HL would be one of the strong picks even now. So just hold it on, and I think you should still see 3,500 levels.
Okay, another one coming your way, Vivek. This one is coming in from a viewer, Rajesh Agarwal. No, sorry, I beg your pardon. Okay, he's not mentioned his name, but he wants your view coming in on APL Apollo. He has about 175 shares of APL Apollo from the price being at around 1,479 rupees per share. He's saying that the stock, however, has fallen in recent times, but he continues to like this particular counter. Fundamentally, you think it makes sense to stay put with this and ignore what has happened in the near term in the stock?
See, one of the top player in pipe segment and in fact, galvanized tubes and all are really a good business for them. So going forward, in fact, even the promoter is quite aggressive. And what I feel is, yeah, there was some negative news, but after this dip, you should hold it on. And particularly the government's focus being on Har Jal, that itself is going to be a big turnaround for the company even going forward. So it's a great, say, multi-bagger which has given quite phenomenal returns to the investors in the past. And I think you should hold it on.
Okay, but moving on to another stock which has been buzzing off late, and that is Inox. Inox group of shares, and in that, Kunal, Sebi Thomas from Trichy is holding Inox India shares from a price of 880 rupees. What's your outlook on this one? Because his purchase is very near to the current market price. Do you believe that there's still potential for good returns? Should he continue to hold on?
Well, can't say much because I think it's the data history for the stock is very, very limited towards just maybe last 10, 12 days odd. So I'll skip this one.
All right. Anything, any take on this, Vivek, by you? Inox India?
See, Inox Wind and Inox India, I think both of them are again, no, this is Inox. No, you're talking about Inox Wind Energy or I'm a bit confused.
Vivek, we are talking about Inox India.
Okay. See, you should again hold it on because what is again happening on the energy side, this stock looks approximately, say, at 52p, and the way the stock has been going down. But after that, what has happened is after the dip, the company has reduced debt. The company is debt-free today's date. And even if you look at the capital returns on the capital, the company has almost delivered 28-29%. So at these rates, I think you should hold it on. Going forward, it might again give you a recovery.
All right, this one is coming from Sayak Banerjee, and actually, let me take this after a while. Let me take one from to Kunal actually, and this one is coming in from Jayashree, who's writing to us from Chennai. She's bought IEX futures, February futures for 172. Kunal, should she stay put with this one or look to exit?
I think you can stay put. Now, my assumption is that, of course, you've bought with a bit of a high risk category over here. The stock has come back towards 164 levels. It's possible that the stock may probably consolidate over here for another 4-5 trading sessions before it gets ready for a breakout, and the market also recovers pretty quickly. So I would suggest to hold on. The chart structure is quite bullish. Maybe you've bought at the top end, but I think if you can probably hold on to it for another few weeks, I think there's a higher chance that the stock post this consolidation should head up higher.
All right, Vivek, coming to you, this query is from Frank, and I guess he's writing to us for the first time on two counters where he's sitting at a huge loss. He's holding Vodafone Idea from a price of 90 rupees where he made the purchase back in 2014. So is this a good time to average this particular name? And he also has JP Power, 100 shares from a price of 85 rupees. What will be your advice on these?
See, first of all, idea, it's on a lighter note, no idea about idea. Why is it actually going up? Now, there are a lot of news and rumors that the government might sell the stake to Elon Musk. What I find is, see, at 2 lakh crore debt, and the company is losing subscribers day by day and month by month. There is no addition of subscribers at all. So this 2 lakh crores debt, even if somebody is going to buy, what is going to happen is, first of all, that deal is not going to happen. 2 lakh crores, nobody is going to buy. Even if they buy, they are going to convert it into equity. And you will have equity base just like Yes Bank. So it would be very, very difficult for the company to survive at these levels. In fact, company might survive, but returns might never come. So it is good idea to book profit in idea. Secondly, JP Power, similar story. Say, company went down and now the company is going to be sold. And of course, there are rumors that Adani Power may buy it, or some other companies they are trying. Tata Power also is trying to buy this company. So if they're going to buy, they are not going to give you valuation of 85 rupees. Definitely, they are going to buy at 16 only. So it doesn't make sense to stay in this kind of penny companies right now, penny stocks particularly. So please come out.
All right, let's move on then. Kunal, let me take this query to you. And this one's from Mr. Lakshmanan, who's a senior citizen and he's a long-term investor. He's saying that he has major investments in HDFC Bank. He's saying that after the merger, the stock has done absolutely nothing. He has Reliance Industry. Also, that one has not seen reasonable rise in the last 1 year, or for the matter of fact, SBI. Now he wants to know, will it benefit for him to stay put with these counters? No doubt you've said that this year you will have the large caps make a good comeback. Do you think that these three will also benefit this year?
Yeah, I think I strongly believe that these three can benefit this year majorly because these stocks are they've gone through a very sideways, no return kind of a zone for the last 2 years, and we are talking of one of the stronger bull markets which we've seen for our country, and in that aspect, it's very rare that large cap stocks may remain out of form for quite a long time. So I would probably believe that these large cap stocks should make a comeback this year, and I think it's a good trade to hold on to these stocks since you already have holding them in your portfolio.
All right, Kunal, the next query is specifically for you, coming from Gautam Balla, and he's been holding shares of Bharti Airtel from a price of 288 rupees. His quantity is 7,000 shares, sitting at good profits. But is this a time to book out profits, or should he continue to hold on?
I think it continue to hold on. I think it's going to be a stock which would continue to reward you if you're a long-term investor, and there could be those few surprise years in between where the stock may give you above the average returns what the stock has been showing over the last many years. So I strongly believe that Bharti Airtel is a top quality stock which you should have as part of your portfolio. So if you're a long-term investor, since you've already purchased at lower levels, I don't see any reason why you should be looking to squaring off or booking out.
All right, this one's come from Yuvraj. This one is for you, Vivek. He wants to enter Home First Finance. He wants to know whether it's a good stock to go ahead and enter into this one, and also he wants two IT stock suggestions from you for the long term.
Home First Finance, I think for long term you can enter. Particularly if you look at the peer group, company is doing good, and at 8,300 market cap, it has a lot of scope to, in fact, do well in future also. So it would be a buy only if it is absolute long term. Short term, the valuations are definitely higher. So that is the thing. Secondly, you said IT companies, right?
Yes, Vivek. Two IT companies for the long term.
Okay, I would, this is a small cap company. It's called Allied Digital Services Limited. I think you should look at their stock seriously. And it's not a large cap company, because large cap companies are too dependent on US and what is going to happen in US this year during elections. I have no idea at all. So this company at 134, 135 levels looks good, and I think you should see 160 on it.
All right, moving on to the next one. And Kunal, this query is coming from Madhusudan, and he wants your take on two counters. He's been holding two shares since the IPO. One of them is Lakshmi Organic Industries, and the other one is Clean Sciences. What's your view in both of these? Good time to add more any of these shares?
So in fact, I think a couple of weeks back, I had a buy on Clean Science where I was expecting the stock to break out from that 1450, 1460 mark. It's already done pretty well, come back towards 1600 levels. I strongly believe that this could be a sign of a turnaround for both of these names, Lakshmi Organics, which I think is trading at 275 or 280 levels approximately, as well as for Clean Science, which is trading at 1560 levels currently. So both of these stocks are a good hold, specifically if you're a long-term investor.
All right, so that's the take coming in on Clean Science. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this one is coming in from Sayak Banerjee, who's writing to us from Bangalore. This one's for you, Vivek. He wants to rejig his portfolio with more holdings of Tata Group companies in this financial year or the coming financial year, or as well as in, he's written FY25, but I believe for the whole calendar year and coming to the next one as well. He wants to know if he can buy Tata Consumers, Tata Chemicals and Tata Elxsi right now, because he already has Tata Motors, Tata Steel and Tata Tech already in his portfolio. Do you think these three counters from the Tata Group pack should make it in his portfolio, or are there others which he's missed out that he should look at?
Cheryl, most of the companies in Tata Pack are way too costly today's date. But if you really want to buy Tata companies, I can name two or three. So one is Tata Power, which we spoke sometime back on the show. And second would be Voltas. This is a contrarian bet, even though the Jefferies report, what we were discussing, gave a say neutral rating on white goods. So Voltas looks good. And thirdly, if you look at, I think Tata Chemicals, because chemicals is a sector still pending to be bouncing back. So that also you can look at. So my picks would be Tata Chemicals, Voltas, and Tata Power.
All right, but Kunal, the next query that I have is coming in on Supriya Life Sciences. Lakshmi Narayan from Hyderabad is holding around 100 shares from a price of 330 rupees, very near to the current market price. Good to hold on, or can he go ahead and add more at this point in time?
Well, I think you can look to even add more at current levels. The stock has just confirmed a recent breakout above 300 levels, trading at 327 approximately. So I think it's a good band where you can start looking at the stock and holding on to it from a long-term play. So I think you can hold as well as look to accumulate if you have extra funds available to average to your holdings.
All right. All right, Kunal, next one is for you from Prateek. He wants to know if it's advisable to freshly invest in BEL.
So yeah, you can look to buy BEL at current levels, but again, there are two things which is important. Your time frame has to be long term. You can't be looking at next couple of weeks or next couple of months for you to get steady returns on BEL, because the stock, of course, has run exceptionally well. And you also have to wait out for a point where the stock may get into that odd phase of correction. Maybe an 8% odd correction or 10% odd correction could be a good enough time from your purchase price to average out further. So you have to keep your quantities a bit more lower if you are starting at current levels for BEL.
Okay, Kunal, one more query specifically for you. This one is from Venkat Rao, and between SJVN and LIC, at this point in time, any stock that you like for a long-term investment, and if not, then any entry levels for these?
So I think LIC is a better stock out of the two. If you ask me to pick one out of the two, I would probably go with LIC at current levels as well, in case if the stock dips down. So typically as far as the data goes by for LIC, it's becoming a low to moderate beta stock. So in a low to moderate beta, we don't expect a sharp correction whenever the stock gets into an odd correction or a mean reversion phase. So currently the stock, I think, made a high which was closer to 860. It's currently at 840. So maybe another 20-30 rupees on the downside. 810 could be a good level in case if you get that for LIC.
All right, this one is coming in from Pramod from Thrissur. This one is for you actually, Vivek. He wants your view on the recently listed company that is EMS. He's a long-term investor and he's ready to stay invested in this counter for the next 3 to 5 years. He already purchased about 300 shares at a price of 250 rupees per share. What's your take?
See, I think you should hold it on, particularly because if you look at the past data, once listed, and I don't know about the future results, but the past shows that the company has been almost delivering 32 percentage return on its capital. So please hold it on. And I think the water space going forward, in fact, we have few listed companies on the markets, and they're doing quite good. And their order book looks quite interesting. And this company as well, I think water is going to be one space wherein a lot of orders are going to come. So hold it on.
Okay, Kunal, since all these IT names are under pressure today, the next query is on Coforge, wherein Srikanth is holding 300 shares from a price of 6,200 rupees. The stock is also down around 2% today. He can continue holding it for the next 3 months. What will be your advice?
Well, I think you should continue to do that. The only, I think, impediment could be the results and the quarterly results for the stock going forward. I think that could be the only roadblock for the stock over the near term. But if the stock enters into an oversold territory, which I believe could be maybe another 100-150 points downside, I think that could be a good point where you may look to even add further. So for 5,800 approximately seems to be a good short-term support. In case if the stock happens to come back to that territory, it's a good zone to initiate fresh longs.
All right, another one coming your way, Kunal. This one is coming in from Vivek's namesake. That's Vivek. He's writing to us from Pune. And he's already purchased Adani Energy at a price of around 1,210 rupees per share. He's saying he's planning to hold on to the counter for the next 6 to 12 months. What sort of a target should he keep in mind for this one?
So I think you can continue to hold on. The stock has just recently given a golden crossover where the 50 DMA has crossed above the 200-day moving average. This could probably bode very well for the stock over the near term. I think if I'm not wrong, it's also confirming or on the verge of breaking out of the previous swing highs of 1240 for Adani Energy. So I believe in both aspects you can continue to hold on. If you're asking me for a target, I would probably believe that the flag pattern target which the stock is making is almost like a 350-400 point target. So about 1250 levels, you can expect 350 to 400 points on the upside.
All right, Vivek, the next query is coming from Rakesh Bhatnagar and he has 2 stock queries. Firstly, Tata Steel holding 5,000 shares from a price of 110 rupees and Borosil Limited 1,000 in quantity at a price of 186 rupees. Can you advise him what to do for the next 1 to 2 year investment horizon? Should he add or book profits at this point?
Tata Steel will do good over next 3-year period. Now, what is going to happen is metals have rallied a bit, and that's the reason most of these companies have done well. The next trigger would be if something happens from China. So Chinese markets are quite low, and if there is some recovery in the economy of China, the metal sector as such would do well. So at these rates, Tata Steel looks a bit costly. So I would not do fresh buying over here, but yes, if you have it, you can just hold it on. Borosil Renewables is one stock. I think you should just buy. They say, no, fill it, shut it, and forget it. That kind of thing. Just buy it and forget it for next 3-4 years. I think the solar energy space, this company would really do well going forward.
All right, this one is coming in from Sameer and this one is for you, Kunal. He has about 11,800 odd shares of South Indian Bank, which he purchased at an average price of 9.1 rupees per share. He wants to know whether he should look to exit this one, book our profits, or do you see further upside coming in for South Indian Bank? And apart from South Indian Bank, he wants to know about Paradeep Phosphates. Can he enter right now?
So hold is what I would recommend for South Indian Bank and maybe trail your stop losses. I think the 200 DMA seems to be a good support for the stock. Currently, it's placed at 21. So with time, assuming the stock continues to move up higher, the 200 DMA would also shift up higher to maybe 22.5, 23 levels. So keep that as a trailing stop loss for South Indian Bank. And even for Paradeep, I think it's a good breakout. I was looking at the charts yesterday, when the stock was on the verge of a breakout above 71, 72.5 odd levels. Today, the stock has inched up higher to almost 80 plus mark. Looks attractive, so you can consider buying the stock as well.
All right, Kunal, N. Guru Prasad wants to know from you any target for Bharat Forge coming in for the next 3 months. He is holding 40 shares from a price of 860 rupees.
So the only concern with the charts for Bharat Forge is that the stock keeps on moving up higher on a very steady basis, but the indicators lag into the stock price movement, which means typically the stock gets into a low beta uptrend. So which means that if the other stocks and the other peers, they rally by a tune of 8% to 10%, the stock may rally by 3% to 4% marginally. So it depends on how the sector moves up. Bullish on Bharat Forge, but not too much expectations over the near term in terms of returns. Maybe at 1237, you can probably look out for another 30 rupees to 40 rupees targets over the next 1 to 2 months.
All right, Vivek, this one's for you. This one's coming from V. Murli, writing to us from Bangalore. He wants to know if we can buy rate gain at around 730 rupees per share, considering it has an excellent growth prospect. Also, he's asking you whether this particular counter has the highest PE ratio. So, does it make sense to go ahead and buy this one at current price?
See, in this SaaS space, yes, rate gain is quite interesting bet. But the other thing, what viewer pointed out, is it at higher P? It is almost trading at double the PE of its peer group. So way costly. And see, what happens is in this kind of market, when the market is quite bullish, you find everything to be cheap, and you find that at 734 it looks quite cheap only. But if there is any dip in the market, these companies will easily be available between 15 to 20% at lower side. So on dips, it would be a buy because it's a great company again. But at these levels, I would be cautious.
All right, so that's the take coming in on Rate Gain Travel. But for this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now, and taking a look at the markets. A good recovery from the day's lowest points, and especially happening for the Bank Nifty, which is now recovered from the day's lowest point and now just holding with a cuts of around 14 or 15 odd points. So we are waiting that there could be a recovery, or rather this index can get into the green anytime soon. But taking on the top gainers in Nifty 50, then that's ITC, which is taking the lead, and 2% uptick coming in on ITC, and some of the other PSU banks like SBI, Can Bank, they're also seen to be buzzing, and it's Bandhan Bank from the F&O space which is inching higher with around 5% of gain as of now. So that's how the markets are looking like at this point in time. But with this, let's once again get back to all your stock related queries. And the next query that I have is for you, Vivek. This query is from Sonali, and she's looking to invest in some drone manufacturing company. At this point in time, do you have any ideas related to the drone manufacturing sector?
Shrishti, I do have a lot of information on drone companies, but I would ask him to wait for some time. Now, there are reasons plenty. We are a lot dependent on China for drone technology, and there are many parts of drones which come from China even today's date. And in fact, there is one more company which is trying to come for IPO. It might apply with SEBI soon, wherein even MS Dhoni is an investor. But what I would do is I would stay away from this space at this point of time. So when things are clear, that time we will surely enter, but right now, no.
This one is from Aditya Patel. He's writing to us from Jalgaon. And Kunal, this one is for you, City Union Bank, for the next 2 months. What's your view?
Bullish on the stock, and my expectation is that the previous highs of 167 should be taken out in the next couple of months. So if you have already bought, I think you should continue to hold on.
Okay, the next query that I have is on Alok Industries, and a couple of viewers also in the past I've seen that they had their query on Alok Industries. So Vivek, what's your advice on this one? Do you believe that it's a good candidate for a fresh investment as of now? Because now that we are seeing that its promoter Reliance is buying and investing more into this particular company. So do you believe that the turnaround is likely in the near future?
See, it looks like there would be a turnaround. And before I go further, I will put this disclosure upfront that I'm holding it in my personal capacity as well, but at lower levels, not at these levels. So yesterday 20% movement, and today almost 7% movement. So 2 days 27% movement. You would not buy it afresh over here because the news is already out. Now Reliance has invested almost 3,300 crores, and the last quarter results what Alok showed. Looks like that just like Zomato, it is going to slowly come into black. So as and when it shows profits, the company would do well, but it's going to take time. It would take at least 18 months to 24 months. So on dips, yes, you can buy. And as I said, as a disclosure, I'm having it.
Kunal, this one's come for you from Badri, and he's holding about 150 shares of ABFRL. at a price of around 265 rupees per share. He's been holding on to this counter for the last 1 year, but the stock has actually done absolutely nothing for him. In fact, he is seeing mild losses also. So should he book loss, or should he wait for some more time, say for a period of about 3 to 6 months?
I don't think you should be booking losses. In fact, if possible, you may look to even add further after yesterday's price action move specifically. The stock is clearly showing signs of a resurgence as well as a comeback in terms of a potential breakout. And going by yesterday's price activity and volume activity, it looks like that maybe 260 could be in the offing pretty soon for ABFRL. So it depends on your risk appetite. If possible, look to add further.
All right, Vivek, what's your take on 361 ma'am India? Ranjit is holding these shares very near to the current market price from a levels of 660 rupees. He can continue this for the next 1 year. What will be your advice?
See, at these rates, again, I would ask him to avoid. Why avoid? Markets are at its peak, so all wealth management companies are doing well. But I think going forward, there should be some consolidation, some correction in the markets. And when that happens, you'll suddenly find that these companies are losing some money, including mine. That is going to happen. So at this valuation, surely a no. But yeah, this space is very good, particularly the wealth management companies, the mutual fund companies, listed ones, and companies like 361. Over next 5-10 years, they would really create massive wealth because the percentage of investors in the markets are still low, and that is going to only expand going forward.
All right, this one is coming from Murari Prasad. Actually, this one's for you, Kunal. India Boost Real Estate. He has about 160 odd, or rather 600 odd shares at an average price of 99.07 rupees per share. Bandhan Bank 225 shares at a price of around 317 rupees per share. He wants to know that for how long should he actually stay invested in both of these counters to actually make good profits. He's saying he's been holding it for the longer term as well.
See, Bandhan Bank, for example, is heading towards a breakout. It's forming a classical inverted head and shoulder pattern with a contracted, right shoulder that generally augurs very well for the stock, and it indicates that pretty soon we could probably be looking at a big breakout for the stock. So it's a matter of patience from current levels, and if that happens, we could be looking at a potential upside of at least in the 50 rupees for Bandhan Bank, say in the next 3 or 6 months, depends on when the breakout happens. India Boost Real Estate is a high beta stock, so I think in that aspect, maybe the stock may take some bit of time to try and break past about the 94-95 mark. But I think if I remember, I think a couple of days back I flagged off yet again that 96 is a breakout point for India Boost Real Estate, and whenever that happens and whenever the stock crosses about 96 levels, I would actually believe that the stock should show very strong surge of momentum. So I would suggest a hold as of now and wait out for that breakout of 96 for India Boost Real Estate.
All right, Kunal, the next query is from Venkatapati, and he's holding 100 shares of Chennai Petro and bought these at a price of just 186 rupees. Wants a short-term view in this particular name?
I think continue to hold on. I think it's done fabulously well. 720 plus is where the stock is trading right now. It's confirmed a huge breakout. I think almost a 16 or a 17 year breakout is what we've seen for Chennai Petro when it broke past about the 500 levels. So I don't see any reason why you should be looking to exit the stock in a hurry. You should continue to hold on.
All right, another stock is AB Capital. Raj from Pune, who's a long-term investor, has been invested in this counter for the last 6 years at an average price of 173 rupees per share. I'll not ask Kunal his views on AB Capital because today that was among his top picks. But let me take your take on this one, Vivek. What's your take coming in for AB Capital, given the fact that he's invested at around 173, the stock price is actually lingering around that level, and he's been invested for the last 6 years?
So since many years, it is in same range, Cheryl. And what I think is you should actually be buying it now because over this years, the company has created really good loan book. And going forward, the fruits of that is going to be seen on the returns front end and the P&L. So please buy it. Great company. And you're getting it quite low valuations compared to all the peer groups. So I think it's a good buy.
All right, so that's the take coming in on AB Capital. But with this, viewers, let's start taking all your queries in the rapid fire session. First query is on Nalco Kunal. Sanjay is holding 800 shares at a price of 98 rupees. Good to book out profits or continue to hold?
Continue to hold.
Kunal, another one coming your way, and this one is coming from Shaswat. He wants to know between Glenmark as well as Gland Pharma, which one is a better investment for the short term?
Tough one, very tough one. I'll probably go with Gland.
Okay, Vivek, Manjula is holding shares of Bata India from a price of 374 rupees. Good to book out profits or continue to hold?
Hold it, and I'm holding it since rupees 60.
All right, Deepak from Mumbai wants to know what is the right price to enter Tata Motors and also what should be the hold time, Kunal?
I don't know about right price, but it's always the right time to buy the stock, even at current levels as well as on dips.
Okay, Vivek, Shankar is holding shares of Samvarthana Motherson 600 in quantity from a price of 99 rupees. Good to hold or book out?
Hold it for 110 target.
Okay, Karthik has got allotment in Winless Bio at a price of around 460. Should he stay put with this one or look to exit, Vivek?
You can hold it on.
Okay, Kunal, Dr. Subaya is holding 100 shares of Bandhan Bank from a price of 230 rupees. Hold or sell?
Hold.
All right, this one is coming in from Venkat Ramani and he wants to know whether it's a good time to go ahead and buy Power Grid at current price for a period of 1 year, Kunal.
Yeah, it's a good price to buy the stock, specifically if you're a low risk investor.
Okay, Vivek, Peter wants to know, can he go ahead and buy Solara Active Pharma at this point in time with a 3-year investment horizon?
Solara Active, you can buy it.
Okay, Rima from Pune has 73 shares of Paytm at a price of around 825 rupees per share. What is the good time or what's the good price to average this counter? What's your take, Kunal?
So I think current levels is a good level to buy the stock if you're a long-term investor.
Alright viewers, with this it's time's up in this edition of Rapid Fire as well as on the Buy Now Sell Now show. Thank you so much Kunal and Vivek for joining us and helping all our viewers resolve their stock related queries. But with this viewers, it's time to wrap this edition and it's a goodbye from me and Cheryl and the entire team who put this show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.